Hello, hello, hello. Let me know if you can hear me across the various streams as we're just doing a microphone test right now. And we'll jump in about 2.5 minutes here. But go ahead and give me some feedback and let me know if the voice audio is coming through okay. Appreciate it. All right, thank you for the feedback on that. So it sounds like the audio is going out to all the various streams here. And let's go ahead and get the music under control. And we'll get started. All right. Hello and welcome to Market Madness Technical Analysis Wednesdays here on Landy's Crypto Corner. Today is November 22nd, 2023, and we're going to be discussing Bitcoin, Dixie, gold, and traditional markets today. Might even take some requests later on. Again, if you've been following along with me for a little while, you'll know that I do the Bitcoin in 60 seconds videos. Typically, they are short videos, and they are uploaded to the YouTube short feed and to x.com under CryptoLandy as the username. So I want to welcome you all here today. And I do see that there's quite a few new faces over in some of the private streams that cannot access YouTube. Thanks for coming and hanging out. Do appreciate having you here. So we're going to jump right into it by taking a look at Bitcoin here on the daily. If you did watch yesterday's Bitcoin in 60 seconds video, we did discuss the possibility of Bitcoin regaining this weekly and the daily basis band after we got this close down below the weekly at 30, which is at 36,200. The close came in at around 35,750. Now, Bitcoin, I had noted, if it did head up and regain this weekly and the daily basis there at 36.2 to watch the upper first standard deviation at around 37,000 to 37,300 or so. And we have fulfilled that target to the upside now. If it does push up from here, keep an eye on this close open at around 37,500. to the weekly at 37.7. Above there, the upper second standard deviation at just over $38,000. That has adjusted up to 38,200. And that would be, run of the highs here. If we do see price push past there, keep an eye on that monthly at $35,000 to the weekly just above at 39 to 40. And if we do see a breakout and close on at minimum a daily and especially a 2-day, 3-day time frame, then I would be raising that target to this next weekly up here at around 41.8 to 42K over time. Now, Bitcoin's just kind of going sideways. It's consolidating. We can see that the bands are in a position of strength right now still, with all of the lower standard deviations and upper standard deviations pointed a little bit up and to the right, along with that basis band there getting swung. If we do see Bitcoin pop up above that upper first, that is a good indication that it's going to test higher around the highs and that monthly, weekly area. At minimum, I'd be looking for a test further up to this weekly at 37.7 to the highs at minimum. And that's on any kind of a daily close or higher above that upper first standard deviation there, which is adjusting, which is one of the big reasons, rather, why I talked about upside as being the upper first around 37 to 37.3. And we will investigate that on lower term timeframes as well, including taking a look at the volume map that we've created over time here for this particular move up, tracking continuation and swing fail patterns along with mean reversion plays. So we'll take a look at that in just a moment, but I did want to call out that the 2-day is closing with today's daily, and the upper first standard deviation, just adjusted something on the chart. There we go. The upper first standard deviation is here at around 37,200. So if we do see Bitcoin close above there by end of day, that does bring into play the upper second up here at around $40,000. So that's where we get our target there at the weekly at $39,000 to $40,000. And there is some closes on derivative exchanges that were higher than this $39,000 area. Now, of course, if we do see closures above that upper second, then we're looking to the next weekly area and, probably beyond to some of those larger upside targets. Now, the daily, we do have some downside targets as well. If we do see the daily basis band and weekly dropped again at 36,200, be aware of that 35.5 low, but it's really all about that lower first standard deviation into the monthly and weekly supports. And that is there at now 35.3 to 400 at the lower first. Of course, we have that monthly at 35K and the weekly just below there, where we saw that absolutely perfect pin come in on the daily on the 14th of November, and that is at 34,750. Below there, I would look to around the lower second, which is currently at 34.4 to 34.5, kind of give it some room. If we did see that dropped, there is support in and around these wicks here at $34,000. There is also a close open low down here at 33.9. So kind of splitting the difference there. I'd look at that rather as an area of interest around $34,000 to that wick low at 33,400 to 500. If that is dropped, yes, there is a close open at 33,000, but it's really going to be all about that daily down there that remains untested at 32,400. And then below there, the big retest is what I would be looking for if we did see price down that way. And that is at 31.8 at the daily, weekly, and monthly level. That's also the breakout for this current move. So not necessarily the first thing I'm looking for is price targets down there. But if we do see things start to head down and specifically get through this weekly here at 34,750 and that lower second at around 34.4 to 34.5, then it's, pretty safe bet to be looking at the bottom side structure over here, as the top side structure is at 34.5 before moving up through that weekly and monthly. And it's, a good bet to be looking at the bottom side of the structure down here to that big support area down there. We got a perfect pin of this upper first standard deviation, so first upside targets have been hit. Kind of already covered that. Really watch that upper first standard deviation. It will continue to expand as well. So Bitcoin may, if it closes above it at 37.2, it might close above it. It's also going to move up with it. So, the next big area would be this weekly overhead at 37.7 that you'd want to see taken out for continuation to test, the upper resistances here to that upper second standard deviation at around 40K. Now, I also suspect that at close today, we will see the basis band somewhere around this weekly here at 34.5 to 34.750. I would bet it's probably going to be somewhere around this zone here to that monthly at 35K. That is a pretty safe bet and pretty conservative, actually. It might even tick up a little bit further. We'll investigate that on our Friday live stream when we follow up with this, but we'll have a 3-day in between there as well. And you can see that the 3-day upper first standard deviation of the Bollinger Bands is right here at the weekly at that 36,200. We see the upper second again right there in that $40,000 range, just over $40,000 at 40,300. We see that the man, I'm having trouble with my voice today. My apologies. The 3-day basis band is also right here in this ever important support area at that 31.8 to 32.4 level. So, very, it's a very good look. I mean, there's nothing really bearish about this, even on larger pullbacks. And because of the spread on the Bollinger Bands, larger pullbacks can be very volatile. But would still, overall be a bullish setup, anywhere above 26,500, which was the last major low. So looking good there. No issues there. I would say that as long as Bitcoin is closing above this upper first, which, this is going to be closing in 1 day and 6 hours. So it will close with tomorrow's candle, and we'll follow up with it on Friday. We've got that upper second, like I said, at 40,300. The 4-day is also going to be closing on Friday. So the upper first will be something that we'll follow up with as well. That is above the monthly now at 35,300 or so. We've got that upper second. Guess where? This is at 39,700 here. Basis is now above those very important weeklies down there at 30,600 to 300. And we'll get to that, and I'll point out that those are going to be some of the more important weeklies, even more important, I would say, than the daily, weekly, monthly retest, although your warning that those would get tested would be below there, of course. Now, the 5-day, another big one. We see that this just opened with today's daily, and I want to call this up. Maybe we'll get rid of support and resistance there, and we'll take a look at this on just our Bollinger Band price action chart here. You can see that this is set up for a nice hammer reversal on the 5-day, indicating initially, if it trades anywhere above this wick high at 37,800 or so, that it wants to go test that upper second, and that is there at 38,800. I do suspect that if Bitcoin is starting to push up against $38,000 even, that this upper second will be somewhere around $39,000 to $40,000. So, this is from a candlestick perspective, a very good setup, especially if we see it really, it's trading right where it needs to start painting this setup at 37,200 or so, 37,100 to 200, which is the close open on the 5-day. That's indicating that if dailies can start closing up here, then we're likely to see the wick highs at 38K get tested, and then above there the 5 days saying let's go test that upper second. We still see expansion is in play at 69 over 69, and let's go ahead and take a look at BBWP volatility, because that is it is setting up to potentially cross down. But as I've mentioned many times before, when you see this, this is still, moving average is still pointed up. What you need to see is BBWP under the moving average, and then the moving average get a negative slope in this case to start looking at the stopping of expansion, of aggressive expansion. And in this case, you would still see residual expansion if Bitcoin is anywhere above the basis, because the basis band will continue to move up towards price action. Upper first, upper second will continue to get residual expansion. And then what you'll see is, and we're already starting to see this, which is good, the lower first and lower second, and subsequently the lower third, which isn't quite there yet, start to curl up. That's what we're waiting for. That will come into play probably in the next 5-day candle. So, we won't really be able to look at this until Monday next week, and then we'll follow up with this. But this is going to be an early indicator for I think things to come on the longer term time frames. Maybe we see a little bit of a consolidation and then it move on if it doesn't move on before the next time that we speak. Now, the upper first is at 34,400 to 500. And you'll recall that 34.4 to 34.5 is where the daily lower second standard deviation is down here. So we do have confluence between the daily lower second, which would, in the way that we see the angle of the Bollinger Bands kind of set up, the early indications are if price was to violently dump out, that would be a very good support area. You got a lower second on the daily, which is either going to be a reversal or a continuation area, which is also going to be confluent with the upper first on the 5 days. So looks good. If it was dropped at any point, at least from here in this current session, 5-day session, the basis band is now coming down and above the lower high breakout area, right around that area. So I should say the close open on the 5-day is right there at $30,000. And then we've got those wick highs at 30,200 to 300. So right around that weekly area. Now this is pretty important. We want to see major moving averages, which the basis of a Bollinger Band set, which you're deriving that from, is the 20 simple. So this would just be your first standard deviation, second and third standard deviations away from that 20 simple. So as this continues to move up and the lower standard deviations come into a position of strength, meaning they're above prior lows, we want to see it. The lower first, for instance, is the first big zone on a longer term time frame like this. If we were to ever see the basis drop from here, we would want to see that hold, but it's currently beneath the prior low. So we want to see that lower first above that prior low, and preferably above that high that was put in around 28.2, and maybe even the wick over here at 28.6, which was a big daily area that we had been talking about, with the weekly that was coming in there around 28K. So let's go ahead and take a look at the weekly now. When looking at this weekly, we can see that Bitcoin continues to tag that upper second. I'm just messing this chart up, huh? Let's go ahead and actually grab the arrow here. Continues to tag that upper second after, kind of the volatility expansion of the upper second standard deviation caught up with price as price has moved sideways on the weekly here. We see that it is being tested, that 37.7 to 37.8. Of course, we already saw that test in this weekly candle. We saw the move down below the weekly supports here. Now, of course, we've got weekly close opens all in these support areas because this support resistance area was drawn out from prior price action on longer time frames, obviously the weekly and monthly and so on and so forth. And now we have new weeklies in here. So, if we see a close on this weekly above the week of the 6th, then we're probably looking at, move back to the highs. And that is coming in at 37,000 we'll call it 37.1. It's $37,086. So anywhere above 37.1 by the end of the week is going to indicate that we're going to continue to test the upper second standard deviation even as it expands. And I do believe pretty strongly, actually, that this is going to continue to expand up into the monthly at 38.5 and weekly area at $39,000 to $40,000 and beyond, probably replacing that upper third over time at around that 41.8 to 42K. We also want to see this upper first standard deviation on the weekly start to get into the local zone. It is just below this close open on the weekly for this local high zone. And the reason why I call this a local high zone is I want to give it some room, but we have the potential 3 candle setup and to put in a high. That doesn't mean it's going to go down further than that. It doesn't mean that it's got to retrace in a really big way if it were to do this, but basically on any close below this open at $35,000 at the monthly would put in a technical high and a close, and then if it dropped the wick low at 34,750, we're looking for it to head down to, that upper first standard deviation and subsequently the supports on the daily and the daily, weekly, monthly there at 32.4 to 31.8, and possibly even a retest of this major weekly down here at 2 weeklies, I should say, because there's these 2 weekly closes from April and June coming in at 30,600 to 300. We want to see the basis move into position around those weeklies down there in a position of strength at support. And we want to see the upper first at minimum in and around this 34,500 where this close is coming in. So, we do have a close open here. We don't have a swing. So, we're marking the other areas as swings. And in this case, we don't have a swing high yet. This is simply just sideways price action at the current highs. Looks good so far to keep testing further up as long as it is above that 36.2 weekly. So I'll give you that bit of personal bias there. Now, of course, from the weekly time frames, we do have the weeklies above that 41.8 to 42K. If we do see any weekly closures above there, the next big target's going to be the monthlies up here, and that's going to be at 45.5 to that $47,000. And I do want to address this because some of you may not have seen this. I think it's Bittrex. Bittrex was having, they're shutting down, I believe. And many people were trying to figure out what was going on with them. There it is. Bitcoin USD. You'll see that Bitcoin USD on Bittrex is up around those monthlies at 45. Maybe even got higher there at 46,300. This is not, you don't want to go and try to arb this. Their USDT pair is doing just fine. It's at parity with the rest of the markets. The reason why their Bitcoin pair, otherwise known as their inverse pair, is skyrocketing like this is because there's no exit liquidity. You can't actually sell your Bitcoin at this price because there's no exit. There's no volume. If you have, even a simple low leverage trade, you're probably not going to be able to get out of it because they have no Bitcoin left on the exchange. The reason why they can still run those USDT pairs is because it's paired in USDT, not Bitcoin. So you're just trading USDT, but the Bitcoin pair is pretty much dead at this point on that exchange, which is why you see it holding highs around major resistance levels. Now, this has been floating around since yesterday. A little bit earlier than that, you started to see like, hey, this is acting a little bit differently. Kind of whispers here and there as people were looking at the chart, but this is not indicative of like, hey, that's where the market's going to go next. I mean, it might, but this is indicative of the exchange not having enough liquidity or enough Bitcoin to actually allow. They should just shut the pair down. I don't know what the hell they're doing, to be quite honest, but there's no exit liquidity. There's no exit volume. Was already out back here on the highs, and bigger players have pulled their money off the exchange rather. And the BTC pair is pretty much dead. And I would imagine there's plenty of trapped traders there. Maybe they'll work something out with them before they go kaput. So I do know that they are closing, and I did want to call everybody's attention to this. Do not, under any circumstances, do not go there and try to trade this pair. It has no liquidity. You'll never get out of the trade. But they'll probably allow you to put your money down for that trade. Anyway, all right. So let's go ahead and get back to Bitcoin here on spot. And we're going to go through the weekly and under timeframes here for momentum in terms of momentum pivots. We have the weekly chart here, 30 daily chart. We'll go daily to weekly. I forgot I went back to the daily to look at that Bittrex USD pair. 36,650 or so on the daily. Closes above there will turn Stoke back to the upside here. It's that would also be a pretty good bottoming area to go test the highs there if we do see that turn and get follow through. So close over close, meaning that tomorrow's candle doesn't just dump right back down. We've got the 2-day, which is closing with today's daily at 655. Sorry. If we do see price head up that way, of course, it's going to be testing around the 2-day highs anyway. The current 2-day high is at 475. So if we see a closure above there, this is definitely looking like it's going to head towards the monthly, weekly area overhead at 38.5 to 40K or so. And we are seeing a little bit of compression on the on the bands. So we're looking at this as a sideways and up consolidation, and if we continue to see this closing above the upper first, and head up to the upper second, we might see one of those quick squeezes and then pop up again for another leg, if that is what is going to be happening, provided it's basically back up, as long as it's closing above 35.5 at this point. Or you could even take the wick low from the 13th. And that's coming in at 34,750. So that's that weekly above there, that daily weekly. The monthly weekly area, 35,000 to 34,750 at the weekly. It pinned it perfectly. So nice weekly retest, and you typically want to see price move on. So, and at this point, if we do see close over close, maybe not this close, but the next close, we see a nice little bullish turn in the bullish control zone or even the overbought zone. It's fine. Can stay up here for an extended period of time. Then I'd be looking for the next upside targets to get hit at the monthly and weekly above. And 3-day is going to be, it'll cross down on any closes in the next 3-day candle below 37,300. Currently trading below there right now, but we'll see what that holds coming into Friday. We've got 37,184 on the 4-day. Of course, that's going to be closing on Friday. And then we've got the 5-day. It's pivoted at 37,350. To 37.4. Again, because of the residual expansion, we could see momentum turn against it, but it still have plenty of room to the upside. In terms of volatility structure of the bands, thus, that likely leads to a bullish reset or allowing the 5-day Stoke to hang on the highs, because we really have not seen a 5-day high put in, right? This 3-candle structure and the structure that's being painted here on the 5-day is not a high structure. It's a high on a wick or a swing on a wick. It is not a closing high structure. So it would only be below the open here at that $35,000 that we would see a high painted on the 5-day that would confirm, either a local test down to that upper first if it's not already there, but then at least the close open here at 34K to some of the structure over here in the 31.8 area as a potential downside target. Doesn't really mean that it has to get there, but at least locally, this looks like it wants to get continuation, quite honestly. And then, of course, we have the weekly, which is pivoted all the way down there at 34.4. Now, to be fair, um, there was a point earlier this week where, at 35, 5 to 6 area that was in play. Now, of course, the weekly momentum pivot is going to continue to the upside here, but that's where we need to remember the 2 week is turned and is pressure up and getting expansion just now. So it's really about these longer term timeframes. If we continue to see these lower term timeframe supports hold, these longer term timeframes begin to really come into play, allowing for the volatility expansion on those longer term timeframes, which then leads into those lower term timeframes getting very nice bullish resets, hanging out in the bullish control zones more often, and then moving on to the upside in big ways and taking big chunks to the upside. So that is really where we're at right now if things are going to start moving in the next couple of weeks. Specifically when looking at the 2 week candle here, close above the upper second standard deviation, even because expansion has begun to kick off, even a move back to around 32.4 to 5 at the upper first, which is a daily untested zone, and even 31.8 or the close open down at 30,600 to 300. Because it's getting, we see how the basis band is pointed to the upside here. That is more bullish than not, right? So we're really looking at that as being bullish retest, looking for bullish structure to maintain and for things to actually really start ripping pretty soon as the expansion continues. Now, you would prefer to see, if you're bullish, it remain above that upper first on a closing basis for something like the 2 week, which is coming in there at that 32, 4 to 6 area, which is a big daily zone. Now, this is not going to be closing for another 2 weeks. So we're going to see, it's going to be closing in 11 days. So it's going to be closing. We'll get a close open on this at the next close open we'll see is going to be on the 2nd of December. So, this is going to be something to watch for. And we're going to have some good indications of where things are headed with the monthly close as well. And it's going to be very important to weave in this next monthly close with something like a 2 week, 4 week time period. So keep that in the back of your mind. We've got the 3 week here is still, upper second area is still getting tested. The upper third is going to be, we've got a December 2nd close on this as well. So upper first is going to be 31,900. So that, 31.8 to 32.4 area. Big to watch this as well and where this moves up to. And because we are seeing the expansion begin to kick off and we're likely to see it tick up, that upper second standard deviation that's currently at $38,000 is likely to move somewhere into the $40,000 to $42,000 area, I suspect, maybe more. It does take a little bit to get going there. Now the 3 week, of course, is going to be at 32,800 on the pivot. The 4 week is also going to be closing on December 2nd, and that's at $34,000. So big momentum pivots, but it's more about this expansion that's happening and in relation to the Bollinger Bands and the BBWP expansion, or expansion of the Bollinger Bands in this case. And upper second standard deviation closures on a 4 week time frame looks really good, quite honestly. Looks really good. Unless we were to just see an immediate reversal, 3 candle structure that puts in a high. For instance, if it closed the 4 week candle here above the upper second, and then we got a 4 week candle close up below $28,000 at the open here, then that's concerning. You still look to the lows here at the basis and stuff like that, at around 25, but it's just going to look like continuation. And that is what this is indicating. 21 over 20 is going to expand quite a bit, I believe. Yes. Yeah, I do think we're going to see expansion here pretty soon. If we don't start to see expansion, then it's probably going to be a longer form consolidation sideways, and we see things expand, later either into first quarter of next year or second quarter of next year. And then, of course, follow up with the monthly upper second standard deviation. I've been saying this every single time that price has gotten close to and above that upper first. Every time we've seen a closure above the upper second standard deviation, we've seen a new all-time high with Bitcoin. And even if we don't see a new all-time high right away, because there is overhead resistances right there, and the upper second is not floating around where the close open all-time high is currently, it's going to indicate very strongly that, pullbacks are going to be picked up on the shorter term timeframes, and then we're going to see continued expansion of the Bollinger Bands to the upside. So there's your Bitcoin breakdown for today. We'll get into the lower term timeframes real quick here. We'll take a look at the volume map. Let's go ahead down to our 15-minute chart, and we can see that the volume map has been very accurate at getting areas of interest. We see that we had a big move, a big move down from this 37,613 area after swinging in and around 37,800 up here. When we see something like this and then we get a rejection, where's the next big area to look at? It's basically these wicks to this close, which the wicks are in white, the close is in yellow. And we saw a drawdown through there. We saw a candle close, below the wicks, move down to the next one, pause, candle close down through that area and the close open. Then we look to the next wick. We see a pause in price in terms of a close open. Did wick below, showing that there is potential below there. Next candle went down and hit that major area at 36,371. Got a nice bounce that ripped all the way through the close open and the two wicks there. Got a close, came back tested, and then pushed up further and swung even this little double top M formation right here on the 15-minute at around 37,500. Swung it with the high up there at around, what did that actually come in at? That came in at 37,535, and then immediately spiked down, and then hit directly right on that 36,371, played sideways, and then got a structured drawdown level by level, closed through the 36,750, close open on 36,6, moved down, stepped it down level by level. Then when we get to bigger gaps like this, we know that once it closes below, which it did on this candle here at 37,371, then we're looking at 36K to that close open down here at 35,750. And then, that brings into play even the close open down there at 35,451. We saw the drawdown there. Nice close open right in between that zone. Once it closes back here, we look to the 36,371 again, crawled its way back up. Now that it's closed back above this wick high here, area at $37,000, we have a bigger zone to play in. We see 37 to 37,600. Above there, we'll look to 37.8 to 37.9 and 38K up there at the highs. And there is no structure, so above that 37,700 up here, there is no structure above there, right? That is the highs. We saw a retest of the highs. We saw a retest of the close open structure at the highs again. What I'd be looking for is continuation, right? That's your continuation above 37.7 to around that monthly at 38.5 to the weeklies at 39 to 40K. Cool. I hope that jives with whatever your volume map looks like if you've been keeping up with the volume mapping. And let's move on to take a look at Dixie. I do suspect Dixie's probably gotten some lower term time frame bounces here. Let's see what it looks like though. Let's get our Landy bands back on. And let's go ahead and take a look at Dixie. Yep. So we did get a sweep of 103. Oh, man. We got our sweep of that 103.17, 103.20. we'd still see the potential for this to come down to 103.10 right there at the lower second, right there in support and resistance. Kind of a zone between 103.10 and 102.93. Kind of front ran it a little bit, but rejecting the lower first standard deviation, so lower term time frame bounces, in play. But what I will say is there is the potential for a close open low to be put in, but you do want to see it close above 103.92 at the wick high there to look for further continuation to that lower first and a close and above to retest this rejective area at 104 to 104 and a half. It kind of already retested 104 at the lower first, so there's your 104 to 104 and a half at the close opens, right up against this resistance and these highs. So above there, I would raise my target to 104.69 and then look over here to this close open low at 105.06. Now, when looking at the daily, we're also seeing a potential Stoke turn, and that will come on any closes above 103.46. So that would put some, downside pressure on traditional markets. Generally speaking, I mean, it's not a direct correlation, but it is closely correlated. And in this case, we have the 2-day also setting up for this as well. And, there is no, it might still be open tomorrow, but there is no, tomorrow's a holiday here in the United States. So I'll actually have to double check. I think most markets will be open in some manner. 104.62 is still pressured down below there. So we do see that it in the next 2-day candle, which, will be, it will be closed when we talk on Friday again, but the lower second standard deviation, if we see a close above this, generally speaking, that 104.69 area at the lower first on the 2-day is in play. And we'll also see residual expansion to the downside, meaning that the downside would also still be in play unless we see closes back above that lower first, in which case we're looking for a retest in the 105 region. But as it stands right now, I mean, this is still expansion to the downside. It might bounce around a little bit, but I would be looking for a continuation until I saw, bullish divergence drives build up on RSI, which we're not going to look at today. We'll look at on Friday. We see that the 3-day, the trend line regression is from the 4-day. So 105.80 is the 3-day, still pressure down on that 3-day. It is around that lower second, lower third zone, right at supports. So seeing a bounce here, not out of the question. And even bigger bounces on the longer term timeframes. This is setting up for a bigger range overall in terms of the 3-day structure of the bands, unless it continues to close below the lower second, which is at 103.75. Now, this is another one that we'll follow up with on today's Wednesday, on Friday even, and then we'll come back to it. Now, the 4-day, I noted that there's a bit of trend line regression here. If we see this start to rise, we'll see this pull back a little bit above this regressive trend line. If we see it break down, specifically close through it, under it, then we're looking at probably this low getting taken out at like 103. 103, the current low of the 4-day, which would be 103.17. So basically targeting that 102 area overall down here eventually, after a test in and around the prior low over here at 102.93. Now the lower second is there at 102.50, so I would be looking somewhere around 102.50 to that 102 area. If we do see that trend line regression break down, we won't see that until next week. So something to keep an eye on, though. It's 106.33 is the momentum pivot. If price continues to rise, we could see a trend line hold as well. So you'll see that because it's in between closing periods, we'll see like the K read will come back up if price continues to rise. And then that's where it could set up like a 3-candle low, and then you've got your trend line regression retest, and things head significantly higher, at least on a bounce. So we'd be looking for the basis somewhere around 105 to the upper first, after getting through these resistances. But if it did close above that basis at 105, then we're looking right back to 106, 107 at the upper first above the basis, coming off that lower first, set up a bigger range in terms of volatility, and then we come back to it later. Let's go ahead and look at gold. 1988 on the daily here. It looks good. We got that little rejection at the upper first here. So I'd mentioned above there, we're going to run this high over here. Just about got there, and that's at 2006. What did it get to? 2007. So it did run the 2000 to 2010 target zone, pretty much splitting the difference there. Target fulfilled. The pullback does not surprise me at all. If it is going to close back above the upper first, then I would look back to the highs there, maybe 2010 to 2015, 16 by the resistance overhead. But this looks as though it wants to range for a little bit longer, just based on volatility structure at the moment. If it does close below the upper first here at 1993, that is going to bring this little bit of a higher low, in terms of wick highs to wick lows. So you've got a swing here, but it's going to bring that swing back into focus if it closes below 1993. And that would be by the end of today. Obviously, it's a daily, so basis is at 1975. So basically, if it can hold 1970 to 1975, it's looking good to keep testing the high side structure over here. And you want to see closes back above 1990 to 1993 to go test, 2K and above, to 2010, 2015 to 2020, so on and so forth. If we do see 1970 drop, keep an eye on that wick low at 1965. That needs to hold. Otherwise, it's going to be looking right back to the lower first at 1960. In this case, 1958. You can just call it 1962. This ever important wick low over here at 1953. Bulls do not want to see this dropped. But looks good. It's probably a little stretched out on some lower term time frames. 4 hour. Yeah, headed down, but it's gotten a lot of nice bullish resets in the strong half of momentum here. One swing of the midline there looks good. It's holding above the basis of the Bollinger Bands. It can come down to that lower first because it is now above this prior low. Yes, you would get a bit of a trend shift locally below 1983, but that's not really that much of a concern on the longer term time frames. You need to see it remain above this low at the lower second. You prefer to see it hold that lower first at around 1980 to 1978 region, or even that support there at 1970, which is this high over here. So you do want to pay attention to this if you are long gold. 12 hour is saying, it's ready for a little bit of a consolidation cool down. This was, a trend break. I suspect to a longer consolidation, the way that the 12 hour looks, unless it gets continuation, above the local high now at 2007, then I'd be looking for this to be testing in and around the basis area at that 1970 region. If it is dropped, we're looking at a longer form consolidation, and come back to it later. But I would say if you're bullish on gold, you want it to move up sooner rather than later. Maybe a short form consolidation from the 12 hour and daily, and then move on quickly from there. The 2-day is going to be worth looking at because we'll follow up with this on Friday. You want to see it close above the upper first here. We got one close after a wick here. You want to see it close above that upper first and start to move on above the highs at 2010 to really dig into the area above here, start digging into the actual highs over there. So consolidation is kind of the name of the game. The Bollinger Bands are really spread out, but the volatility within them is very low. So just to give you a little tip on this, if you're using Bollinger Band standard deviations to measure volatility, you can see that price movement in terms of BBWP is very, very, very low, meaning there's a cool down in play, right? We see the lower standard deviations beginning to curl up. We see the upper standard deviations beginning to, take off to the upside. So it is an upside bias being above that basis. But because volatility is really low, you're only really going to see volatility. You can get massive spread in the bands like this, but you're going to see it kind of do this upwards to into the right kind of a march. But if we see the basis band breached, you'll see a quick cool down in volatility and then a run to the other side when you see a big volatile range like this. So unless we see close over close right by the basis band or in between the upper first and lower first, closer to the basis band, what you're going to end up seeing is price can pretty much move freely between these levels. So we do need to be aware of that. That price is the volatility bands are very, the volatility of the bands themselves is very high, but volatility of price action within the bands is showing that it's low, meaning that it can move freely between the upper and lower standard deviations. And your bias is above the basis. The upper standard deviations are in play. Below the basis, you're looking support and resistance, but then the lower standard deviations are in play. And in this case, this is a cool down period, so we are going to be seeing this quickly catch up. If price just kind of goes sideways at the highs and consolidates. If price goes sideways at the highs and consolidates over the next few 2-day closures, right? I would say probably the next 2 to 4 2-day closures, which is 4 to 8 days of closes. So 4 to 8 trading days of closes here. We're likely to see volatility cool down, and then we can start to evaluate direction based on closes above the upper first, upper second, or below the basis, lower first in this case, because price would be, is currently above the basis and pushing the upper first. If you start seeing closes below the basis, lower first, and especially breaking down from any kind of major support areas, then it's likely that we could see expansion to the downside. Now, this would all be in the context of a longer term time frame like a weekly, which is beginning to point to the upside here with its basis, and we see a flattening of the lower second and expansion of the upper standard deviations, upper first, second, and third. We do see even the lower first is now curling up, and that is right at a major support area at 1893. So, and on the weekly, you want to see this settle low right here. So you do want to see this weekly close above 1993. Maybe this week and next week. That's what you want to see if you're bullish, to go and look higher. And then, of course, take out this high. Take out the high 2009, 2010 to move on. Then we have our trend break, higher low to higher high structure. So we have our weekly uptrend, which would be pretty massive. And, when you see a regular stoke, again, this is close over close price action. When you see a regular stoke, this is measuring close over close momentum, not volatility of RSI, which is what a stoke RSI is. When you see this in the bullish control zone, and particularly in the overbought zone and something like a weekly, this is usually where the biggest moves happen. And in this case, 1977 to 1980 is the area that needs to hold up on the weekly. So, you want to see gold, hold this stuff, reset on bullish or reset on lower term time frames, and just move on, right? You just don't want to see 1970 drop. That's going to be the big one, and then subsequently from there, 1960 to 1953 are going to be the biggest areas to the downside to watch. Below there, things start to get very rangy looking, and probably some big volatile moves to the downside for retests. When looking at traditional markets, we've got Dow moving up. Something we talked about already. It has hit our target around 35,300 to 35,500. That's going to be the next one. So 35,300 has been fulfilled. Above there, we're looking at the highs up here, 35.6 to 8. And you can see upper second is right there at 35.8. So it looks like continuation. This is where you're seeing it just kind of hang out in the overbought zone. 35 to 74 is going to be the momentum pivot. Doesn't really matter. We're looking at volatility at this point. That's once we see a high put in, then momentum's going to matter. And at minimum, you want to see a 3-candle high. This can pull back to the upper first standard deviation around 34,962 to $35,000. That support area that it broke through. It just looks like continuation above there. So, until we see a 3-candle structure put in, we see multiple drives of bearish divergence building on RSI, which I will look at here because it might become relevant in between now and Friday's close. Yeah, there's nothing. So looks good for continuation. Maybe shorter term time frame pullbacks notwithstanding here. Weekly, you do want to see it close above that upper first standard deviation. Go and run that high at 35,800 to 36K. And 36K, just remember, is only slightly above there. We've got the closes, this close open over here where this order block's coming in at around 36K. And then we've got the higher highs there with the lower high close above it at 36,300 to 500 area. And then, of course, the wick high there at 30, almost 37K, 36,950. So this looks like an all-time high run to me. And any closes above the upper first standard deviation on the weekly here at 35 to 35,144, 35,150. If we see a Friday closure above there, this is going to pretty much solidify for me that over time we're going to see that upper second standard deviation as long as it is trading above the basis at 34,350 currently, probably 34,500 or so, somewhere around this low. And actually it's right there. So 34,350. So above there, this looks like it wants to test 35.8, gets above there. It's going to be an all-time high run. Weekly momentum supports this. We've seen multiple drives of hidden bullish divergence here off this structure, and even the bullish control zone here is going to be, the bullish control zone is going to be 35.8. So, looks good to keep continuing. We'll follow up with this on Friday, of course, coming into close. 16,000 is where our target was. We had previously, we previously already hit this, but we were looking for a little bit more. Close above this wick high. It's breakout. Breakout's legit. We were looking at this next structure. We've already seen this taken. We've seen the low over here taken on the daily. The next big area is going to be 16,500 to the highs, to the all-time high. 16,760. Man, I already said this on Monday and Friday of last week. Those freaking macro experts telling people to sit out of some of these pullbacks and just scaring the shit out of people who don't know any better, I guess, just really frustrates me. And this only solidifies that point much further. I've maintained that they're full of shit, not because, partly because they're using doctored numbers to create their thesis, and instead of actually looking at what's going on in the auction. And that's where the money's at. The money's at auction, and this is the auction. So either look at what's right in front of you, or you miss it altogether and misguide people for extended periods of time. Learn how to chart, learn how to do TA. When you do TA, like I've said, it's not astrology for men. Women can also play this game, and it's literally just evaluating the auctions and historical auction prices and moving on from there. If we do see a weekly close up here, the breakout's legit. I would want to see some pullbacks, but that doesn't mean it doesn't run the all-time high first. Weekly is going to be good on momentum, above 14,400 to 450. So trading well above there right now. Looks great. Also, this is a nice pinch. This was expansion into contraction. and that's rarely going to lead to re-expansion right away. If it was, like I had said before, it would reject the upper first, upper second area. Could it do that still? Absolutely, but that's not the picture that's being painted right now, especially when looking at momentum on the weekly and 2-week. This is 100%, indicating that it wants to test up higher. Doesn't mean it will, but that's indicating basically everything is aligning, saying that it's going to push higher. So I think we see an all-time high, maybe December timeframe, if it doesn't do it earlier than that. I mean, there's still some time left this month, but I would be looking for maybe shorter term time frame pullbacks to get picked up. Maybe a Christmas run, a Santa rally, if you will, to the new all-time high, and then dump it out coming in the next year, and then but lock in that quarterly as a good quarterly, and then come back to it. First quarter pullbacks, and then come back to it coming into second quarter and see what's going on there. Maybe it'd be the final rally, double top everything, and it pulls a Bitcoin, double top rally at all-time highs. That would actually be hilarious if it did. Of course, we will evaluate if that is ever going to be the case. I don't know why SPY does not have any of my important areas on it anymore. It doesn't really matter. 460 is in play. High came in at 456. So we're right in the areas that we had spoken of. Close above this last high right here at 455. 453. That's what it was. 453 to 455. So we're kind of filling this gap. That's right. Even up there to 456. So above there, then we're looking 460. 460. Yeah. So this gap this has been filled. Now from a daily perspective, because this gap has been filled, it's right up against the upper side. It's getting expansion rather. And unless it's going to go push the upper second rather, and momentum kind of runs out, we could see this, pull back locally, but it's like 100% in higher low position. So it's good to keep continuing above 450, where the upper first is. And then we've got a range between the upper first and the upper second, which is actually up there at 465. Obviously, it's got to take out the highs at 460 to go 459.44 to be exact. So basically 460, and then we're looking 465, 470, which will put it around this prior high over here, and starting to push the lows a little bit further in the, it's already basically there. Man, it's already basically there. It's already pushing into these lows. If it can reclaim these lows, yeah, we're looking at 465 to the all-time high. It's from there. 470 to 480 is not going to be hard. Is not going to be hard to hit for the market. So all-time high run is very much in play. Yeah, it's getting overheated on the daily. It's overextended, but even on a violent pullback, 420 again, it's set itself up in a bullish position. You wouldn't want to see that, but it's still in a bullish position, even on like massive downside moves. 455 is going to be the momentum pivot. It's going to be chasing right on top price action. And then that weekly is really what's giving it away. Closures above the 451 area. I would say 450 to 451 from the daily. Coming into the weekly, we're going to see this upper second extend to that 465, giving us that 465 target match on the daily. And then we're going to see this start to expand past that wick high over here at 462.07. And that's really where we're looking at 465 to 470. That's the final boss, being 475 up there on the actual closing highs on the weekly. Above there, it's all-time high run and higher. 414 is the momentum pivot on the weekly. That's going to aggressively push up 420, 425 area. As long as SPY is closing above the weekly basis band at around 440 to 445, I would say it's fine. In fact, I'd give it a little bit more room. 440 to 443 looks good. So, yeah, don't follow those macro people. I mean, if you really just want to understand and get pissed off about all the economic numbers, sure. And we can always do that kind of stuff. I could bore you with all the economic numbers and doom and gloom about it, but it's really all it leads to is more pain and suffering for everyday Americans here in the United States. And for those of you internationally, you're seeing and feeling the same things. But, even when looking, now that we've finished this up, I'll just kind of get over here to currencies bonds. You see a reinversion, you see inflation bouncing on the inflation index for CPI. So realistically, we're going to see markets tick higher while the pain and liquidity crunch continues, because those that have money that are losing in some of these larger areas, take commercial real estate, and you've got major companies that are invested in that area. What do? They reinvest in other areas to offset the losses. And in particular, when you've got, BFTP with the Fed running that program, just basically providing liquidity for bank buyouts and bailouts behind the scenes, and exit liquidity for those institutions. You're not going to see the same things that we've seen back in 08, 09 time frame especially, and it's not going to look the same every time. It's not going to be. I don't even think they're going to move aggressively into QE. In terms of traditional QE, it's more of maybe they start lowering those rates sooner. We've got to pause and then start switching to what everybody's going to term as QE, but I don't think they're going to QE by buying up demand. I just don't see it unless they strike a deal with Treasury or restructure and restructure debt. In which case, the economy will start to get a little better for the everyday person, but only minusculely for a little bit, because then inflation's going to catch everything. So you'll have like this ebb and flow where things get a little bit better. There's kind of a pause, and like everybody getting killed at the stores, buying food or at the pump and like stuff like that. And it's going to vary sector to sector, but what you'll end up seeing is inflation rebound in a massive, massive way. And because production here, for instance, like in the United States, just cannot outstrip the demand. So you're just never going to see you've got this ever increasing supply of money, because they're going to need it to take care of debt and to absorb debt, right? And then you've got demand that outstrips supply everywhere you look. So it all starts in the energy sector. And I've mentioned this before when talking about Bitcoin and how it's going to be the base layer for energy, just energy production of a society. And you've got an issue where energy production of this society has been way over leveraged. So what you're going to have is you'll always have the demand outstrip supply of that energy production. And it's just going to push prices higher. So, and that's where you want to see, something like Bitcoin and, the like continue to rally, counter to that uptick. All right. I think that's going to do it for the analysis today and a little bit of my anecdotal quotes here. I do see that there's quite a few people in the chats over there, quite a few new faces in the private chats that cannot access the public YouTube from that network. So yeah, got basically some work people here. Yes, cool. So yeah, they're just sitting in to observe. Awesome. Bitcoin trading around, what our target was yesterday. We actually went above that target a little bit here on the highs while I was speaking at 37,445 40. So the next big area, if it can, at least when I'm talking about those targets, by the way, on the Bitcoin in 60 seconds videos, we fulfill the targets on wicks, but it's the close that you're looking for continuation, right? In that direction. So a close above the upper first at around 37, 37,000 at 37,300. Then we're keeping an eye out for that 37.7. You can take 37.5, but 37.7 to the highs here at 38K and higher to 38.5 and 40K and so on and so forth. But it's something just to watch out for. On that closing basis, we fulfilled the targets from the Bitcoin in 60 seconds videos, but really what you were looking for is the follow through on a close. So it's going to be about where things close today. And if you're bullish, you want to see it close nice and high up there. Yep. Let me go ahead and look over in the public chats here. We've got YouTube as the public stream, but we do have Twitch going, but nobody ever views things from Twitch. Got quite a few people in the YouTube stream here. Don't really have anybody talking. Let's take a look here. We've got JR, how you doing? That's me, and No Name, how you doing? And Ivan. So, unless there's any pertinent questions regarding markets or what you might be looking for here in terms of Bitcoin, I think I'm going to wrap that up. We have Thanksgiving tomorrow. I'm going to go spend some time with some family. And I hope for those of you here in the United States that you also do the same, or at least family and friends, or friends if you don't have any family around you. And then we're gonna go from there, and we'll roll right into Friday. I'll see you again. I should, no guarantees, but I should have a Bitcoin in 60 seconds video at least later today. If for nothing else than to say target hit to the upside, and here's the same targets that we've been looking at: 37.7 to 38K, 38.5 to 40, 41.8 to 42. So, and then all the same stuff to the downside, but at least a follow up on where we're at and where things might be headed. There probably will not be a Bitcoin in 60 seconds tomorrow. And I will, more than likely as normal, have a Friday live stream. So we'll do a Friday market analysis follow up and look at the weeklies across various, Bitcoin and various assets and indices. And for those of you that are here from the prop shop that are doing exams, I will not be your teacher. I'm just the director of educational stuff over there for you. But even though I'm not the teacher, you can, if you have questions or concerns, or you're having difficulty with a particular subject, feel free to shoot me an email. Hit me up in the learning, in the learning app, and I'll be happy to answer your questions. Jimmy is going to be back soon. Obviously, he's on vacation. We've got some other guys getting you guys all set up over there, but Jimmy will be back soon. He'll be able to coordinate with you guys as you're coming into basically the final stretch of this year before we wrap things up and get ready for next year's modules. Yep. All right, cool, guys. You guys take care. Thank you for hanging out. For those of you that are new and prepping for, the first quarter of next year, I think that's fantastic. Get it out of the way early. Do a lot of self-study now. And then that's only going to benefit you, get you in for testing and registration. Yeah, as we clear out the final testers of this particular quarter and coming into the home stretch of the final months here. So thanks for joining, guys. You didn't have to, but I do appreciate it. Enjoy your vacation for those of you that are on vacation. And for those of you in the public chat, I want to thank you for hanging out with me over here on YouTube and in Twitch if you are in Twitch. And you have a wonderful Thanksgiving. Have a great morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And as always, please stay safe. And with all of that being said, I'm going to stretch for a little bit of time here as I get music rolling for the outro here. And well, not really the outro, but the end of stream, I should say here. We'll do 11. We'll go 55 here, so people who are catching up. And I have been putting a few Easter eggs here and there in terms of maybe some Bitcoin related memes at the end of these streams. We'll see if I get one in today or not. You'll just have to kind of scrub through and watch after the fact if you don't hang out for the musical section. All right. Thanks, everybody. Trade safe, stay safe. And with all of that being said, Landy out.